Good evening, morning, afternoon. How are you doing? Sure you had a great weekend. Sure your family had a great weekend. Happy new month to you all. Happy new month. Has been trading up. Last week was profitable. Last week was profitable. If you can hear me, please drop your comments. Drop your comments. I welcome you to tonight's weekly market analysis session. You're welcome. You're welcome. Can you hear me? If you can hear me, I would like to know. Drop comments. Drop your comments. Okay, Mr. David, Mr. Ifeanyi, you're welcome. You're welcome. I believe you guys can hear me. Can you hear me? Can you hear me? Can you hear me? All right, cool, cool. So let's go straight to the chart. Let's go straight to business. Okay, let's go straight to business. If there's any pair you want us to analyze together, just drop it in the comments section. Okay, so let's start with GBP USD. Let's start with GBP USD. As you know, the months just started. Okay, a new candle for the month just opened, so we need to look at how last month's candle closed to predict what price will do this month. Okay, so this is a monthly time frame. It's very important that after the close of the monthly candle, you look at the previous month, see how the previous month's candle closed. That is what you would use in predicting what price will do in the new month. Okay, so on GU, you can see last month's candle closed as this is a spinning bottom, right? It's closed as a spinning bottom. So I will be working with this candle, this spinning top, as you see it here. We have an high and we have a low, and last month's candle also we had an high. Okay, so this is demand and supply level, right? This is demand and supply level. If price breaks the resistance zone or supply level, we look for buy. If price breaks the support level, we look for sell. Okay, but we don't want to wait for price to hit support or the resistance level before we decide to buy or sell. Okay, so we need to go down to lower time frame. Please, you guys should manage my voice. I'm not feeling too fine. Okay, but I just have to be here. Okay, so let's go down to weekly. Let's go down to weekly time frame. Okay, let's see what we have on the weekly. So on the weekly time frame, we can see that price has been in a range for some time. From this point to this point, price has been in a range. Okay, but if we look at the pattern that we have here the past few weeks, we had an hammer, a spinning bottom, and you would see this next candle that closed bullish, and it closed above the high of this hammer. That tells me that demand is higher than supply, and when demand is higher than supply, there is a high probability that price will go up, right? So the fact that this candlestick has closed above the high of this candle tells me GBP is bullish. Okay, so let's go down to daily time frame. Okay, so nice. We have a good pattern here on daily. So this is what I'm going to look out for. I'm going to work with on the daily time frame. The previous high of this candle. Can you see this high? This high. Can you see the high of this bearish candle? can see this high, right? So I'm going to identify the high of that candle. Price is expected to pull back. You can see after the breakout from this high, I expect price to pull back to this level. Can you see that? And you can see price has already pulled back to this level, and you can see the candlestick that formed at that level. This is a spinning bottom. You would also notice that we had a resistance here. You can see we had a resistance here. This was a resistance. If you go back here, this was a support strong resistance. You can see we also had a support which became a resistance. Here also we had a support which became a resistance. That tells me that this level is a key level. Okay, this is a support level which has become a supply, right? This is a support level that has become a supply level, a demand level which became a supply. After this candlestick broke out from this demand level, or you call it your support zone, became a supply or a resistance zone. I hope you're following. I hope you get that. So for this candle to have broken out from this resistance, this tells me demand has exceeded supply. And when demand exceeds supply, price is expected to go up. And as you can see here also, this candle, you can see price pulled back to this level. And this candle closed above this zone. So this tells me that GBP USD is bullish. So my bias on GBP USD this week is bullish. So my first target on GBP USD this week will be this high. Okay, this will be my first target. And my second target will be this next old high, because liquidity is residing at these previous highs. Is that clear? So let's go down to 4 hour. After the formation of this spinning top or spinning bottom on daily, if we switch down to 4 hour time frame and we are able to identify a bullish reversal pattern on 4 hour time frame, that will be a confirmation that there is more demand than supply. Okay, so that is what we're going to look out for, or that is what we want to go identify on the 4 hour time frame. On the 4 hour time frame, okay, a bullish reversal pattern on the 4 hour time frame after the close of the spinning bottom on daily time frame. So let's go down to 4 hours to see the pattern we have on. So you can see the pattern we have on 4 hour time frame. Can you see this? On 4 hour, we had this bearish candle that formed before this bullish candle. Okay, this is a Marubozu candle. This is a Marubozu candle. This is a bullish reversal candle. And you can see price has closed above the high of this candle on 4 hour. You can see. Can you see? Can you see that? And we also have an hammer. You can see this hammer candle. This is a confirmation that we have more buyers in the market than sellers. So we should look for buy opportunity. As you can see, this move that occurred on this hammer candle, the first thing they did was to hunt for stop losses at this low. You can see. You can see. So they've hunted for the stop losses at this level. So the next thing is for them to hunt for stop losses at the buy side liquidity. And where do you have buy side liquidity? These previous highs. That will be their next target. Now, before you jump in and buy next week, before you buy, you can see that a resistance has formed. You can see we had a resistance that formed on Friday. Can you see this? So before you consider buying, you want to wait for this 4-hour resistance to be broken. Okay, wait for 4-hour candle to close above this resistance before you consider buying. I hope that is clear. I hope that is clear. So that's my take on GBP USD. My bias on GBP USD is bullish. Now, Mr. David says, okay, Australian dollar USD. Let's look at Australian dollar USD. So we start with the monthly time frame. So you can see how last month's candle closed. It closed as a spiraling bottom, right? It closed as a spiraling bottom. So after the close of the spiraling bottom, we'll go down to weekly time frame. If we can identify a bullish reversal pattern on the weekly time frame, that's a confirmation that Australian dollar USD will be bullish this coming week. Okay, if we can identify a bullish reversal pattern on the weekly time frame, that will be a confirmation that this coming week will be bullish. Mr. Eze, I can see you. Good evening. So let's go down to weekly. So you can see the pattern we have on the weekly time frame, right? This is a bullish reversal pattern, right? This is a bullish reversal pattern. So we had a support here. Can you see this support? Also, if you go back here, you will see we had a resistance here, which became a support, right? After this candlestick broke out from this resistance, this level became a support. And you can see price has tested that level, right? 2-3 times. And they've not been able to push price below that support level. This tells me that this support has a high probability of playing out. It has a high probability that it's going to play out, right? Because this level has been tested several times, and at this level we have several bullish reversal pattern, right? So this week I'll be looking for a buy setup, buy opportunity on Australian dollar USD. So let's identify the areas of liquidity on Australian dollar USD. Yeah, so this is the first area of liquidity on the weekly time frame. Okay, this is the first area of liquidity, buy side liquidity. Then sell side liquidity on the weekly time frame. This will be sell side liquidity. So price is either going to go to this buy side liquidity, hunt for this buy side liquidity, or sell side liquidity. But like I said, my bias is bullish, so I expect price to hit this this previous high. That's my expectation on Australian dollar USD. So let's go down to daily time frame. After the close of this bearish candle, this weak candle, after the close of this weak candle, let's go down to daily time frame. On daily time frame, we also want to identify a bullish reversal pattern, right, on the daily time frame. If we can identify a bullish reversal pattern on the daily time frame, that confirms the trend to be bullish. Okay, so let's go down to daily time frame. What pattern do we have on daily? Let's go and see. Can you see the pattern we had on the daily time frame? Can you see? If you're on the WhatsApp group, I posted that after the close of, I told you guys, after the close of this candlestick pattern, this is an inverted hammer. That was on Thursday. I told you guys we should expect a bullish move on Friday because of this candlestick formation on daily time frame. That was on Thursday, and you can see how it played out on Friday. Australian dollar USD was bullish, so you can see what we have on the daily time frame is a bullish reversal pattern. Can you see that? This is a bullish reversal pattern, and a new support was formed after the formation of this inverted hammer. Can you see this new support was formed? Okay, so you cannot sell Australian dollar USD until this support is broken. You have to wait for this support to break before you sell. But like I said, the setup we have here is a bullish reversal pattern. So you should be looking out for buy opportunity. Okay, you should look out for buy opportunity. Now, after the formation of this pattern on the daily time frame, the next thing you need to do is to identify fair value gaps on 4-hour, 1 hour, or 15 minutes time frame. I hope you're getting me. I hope you're following. So after this pattern on the daily time frame, we need to go down to lower time frame to identify fair value gaps, because before price would hunt for this buy side liquidity, before price would go up, it needs to fill the fair value gaps that was created before it push up. Okay, that is why we need to identify fair value gaps on the lower time frame. We don't just want to jump in and start buying from the current market price. We want to see price pull back and fill fair value gaps on lower time frames before we execute a buy trade. So let's go down to 4-hour. So can we identify fair value gap on 4-hour time frame? We have a fair value gap here, this on 4-hour time frame. You can see this gap. The gap in between the high of this candle and the low of this third candle, that is the fair value gap. Okay, I hope you get that. That's the fair value gap. So we want to see price fill this gap before we consider buying. I hope that is clear. We want to see price fill this gap before we buy. Now let's go down to 15 minutes and see if we have a fair value gap on 15 minutes. So you can see on 15 minutes, this is the most recent fair value gap on 15 minutes. So I think we should work with this fair value gap, the gap in between the high of this candle and the low of this. No, the fair value gap here will be this. Sorry, this, yeah, there's the fair value gap on 15 minutes. The gap in between the high of this candle and the low of this bullish candle. This is the fair value gap. So we want to see price fill this gap before we buy. I hope that is clear. Price should fill this gap before you consider buying. So when price gets into this zone, into this gap, you wait for a bullish reversal pattern to form inside this zone, inside this gap, before you buy. I hope that is clear. A bullish reversal pattern must form before you execute a buy trade. Okay, so that is it for Australian dollar USD. And if you are buying Australian dollar USD, if price fills that gap and you are considering buying, your stop loss should be a few pips below this level. Okay, because you would agree with me that this low is an area of liquidity. It is an area of liquidity. There are a lot of stop losses at this level, and the institution might want to go for those stop losses. That is why you have to set your stop loss 10-15 pips below this level. Okay, now when this resistance gets broken, you can now adjust your stop loss. Okay, you cannot adjust your stop loss, but if this resistance doesn't get broken, please, your stop loss should be 10-15 pips below this level. Okay, so if price pulls back to this gap and price now push up, breaks this resistance, then you can now adjust your stop loss maybe to the low of this fair value gap. You can now use the low of this fair value gap. I hope you get the logic. I hope you're getting the logic. Okay, so that is it for Australian dollar USD. We wait for price to break this resistance for us to buy, or price pulls back into this gap for us to buy. I hope that is clear. Oh, let's move to the next pair. Okay, gold. If there's any pair you want us to analyze together, please drop it in the comment section. Please, you guys should manage my voice. I'm not feeling too fine. I think it's because I've talked too much. Been from classes to classes this week, so my voice is not in good form. Please, let's move to the next gold. Gold. So let's start with monthly. So you can see the pattern we have on the monthly time frame. On the monthly time frame, a resistance has been broken. Can you see that? A resistance has been broken, and I believe where price is heading to now is this next area of liquidity. Okay. Going by the monthly time frame, if I want to sell gold, I would need to see price break these lows. Okay. This is the area of liquidity on the monthly time frame. Okay. So if I want to sell gold, I want to ensure that this lows is cleared. Okay. But as it is right now, a resistance level has been broken. That tells me that demand is higher than supply, and when demand is higher than supply, there is a high probability for price to go up. So with the pattern we have on gold on the monthly time frame, gold is bullish. Okay, gold is bullish. So let's go down to weekly time frame. Like I told you guys, it's important that you know the trend on the monthly time frame. When the candle for the month opens, for a new month opens, you look at how last month's candle closed, the pattern that formed last month, and you can use that to predict what price will do in the new month. It's very important. Okay, it doesn't matter if you're trading 1 minute time frame, 15 minute time frame, 1 hour time frame. You have to know the trend on the higher time frame before you switch to the lower time frame. The lower time frame would always flow with the higher time frame trend. It's very important. Okay, so let's go down to weekly and see the pattern we have on the weekly time frame. You can see also a resistance level was broken last week. Okay, this tells me that gold is bullish now. The current market price isn't good price to execute a buy trade, right? We cannot buy at the current market price because this is where gold started going bullish. Can you see after the formation of this hammer? So we should have entered a buy trade from this point. After the formation of this hammer, this would have been the best entry for gold. So if you are buying gold at the current market price, you would be taking a very high risk. Okay, you would be taking a very high risk. So before we buy gold, we want to see price pull back. We cannot buy gold at the current market price. Those who bought last Thursday and Friday, they made good profits on gold. You cannot jump in and buy at the current market price because those who bought on Thursday, Friday, or throughout last week, they would be considering selling at the moment, right? They will be considering selling at the moment because they have made much profits and they want to take profits from the market, so they would have to sell. Okay, and if they start selling, the demand for gold would drop, right? Demand would drop and supply would increase, and when supply increase, price is expected to pull back. And I'm very sure that after the formation of these candles, this bullish candle, a fair value gap was created on lower time frame. So we want to see price pull back and fill that fair value gap that was created on the lower time frame before we buy. Or we could also make use of the Fibonacci tool. Okay, we could also apply Fibonacci tool. If you don't know how to identify fair value gaps, just apply the Fibonacci tool. This is the swing low, the most recent swing low, and the most recent swing high. Okay, apply your Fibonacci tool. Okay, then wait for price to pull back to a discount zone. wait for price to pull back to a discount zone before you execute buy. We buy at discount, we sell at premium. And as you can see, price is at premium at the moment. You don't want to buy. Buying at premium is at a very high risk. So let's go down to lower time frame. Okay, let's go down to the next time frame, which is daily time frame. So you would see on daily time frame, we have several fair value gaps on the daily time frame. This was a fair value gap that was created on daily time frame. Okay, this is a fair value gap on daily time frame, but I'm not sure price will pull back to this level. Okay, because of this aggressive move. This bullish move was aggressive, and I don't expect price to pull back to this zone. Okay, so I would work with this high, the high of this candle, this bearish candle. I want to see price pull back to this high. Okay, the high of this bearish candle that formed before this reversal candlestick pattern. Okay, that will be my expectation on gold. I want to see price pull back to this level before I would buy gold. I cannot buy gold at the current market price. It is very risky. Okay, so price should pull back to this level before buying gold. Or let's go down to 4 hour. We could also work with the most recent fair value gap that formed on 4 hour. Let's go to 4 hour. Okay, so you can see on 4 hour also we had fair value gaps here. Okay, yeah. So this is the most recent fair value gap that formed on 4 hour. And you could also see on 4 hour that if we're to apply our Fibonacci tool on 4 hour time frame, let me delete the weekly Fibonacci. We could work with this swing low. You can see this swing low on the 4 hour. This is the most recent swing low on 4 hour, and this is the most recent swing high on 4 hour. Can you see that? So we can work with this. Okay, we can work with this. Okay, so this fair value gap I just identified is at equilibrium, right? This fair value gap is at equilibrium. So let's go down to 15 minutes. After this engulfing pattern that formed here on 4 hour, you can see this engulfing pattern that formed on 4 hour. Let's go down to 15 minutes to identify the fair value gap that was created after the formation of that engulfing. Okay, let's go down to 1 hour before 15 minutes. 1 hour before 15 minutes. So you can see the fair value gap that was created on 1 hour. Can you see this? And that gap got filled last week. You can see how price reacted at the fair value gap. You can see price pulled back, filled the gap, and immediately price went up. Can you see how price respected that fair value gap? And so because this fair value gap has been filled, there's a high probability that price will not pull back to this fair value gap because it has been filled. Okay, it has been filled. So we could work with this next fair value gap on 1 hour time frame. Okay, because this one has been filled. So let's remove this. Okay, so we could wait for price to pull back to this fair value gap. Okay, so that's my expectation on gold. I want to see price pull back to this level, to this fair value gap, okay, before I would buy. That's my take on gold. I hope that is clear. I hope that is clear. Mr. Chimeze, evening, I can see you. Evening. I hope that is clear. Which other pair do you want us to analyze? Drop it in the comment section. Drop it in the comment section. Okay, let's look at Euro USD. As you know, Euro USD is positively correlated with GBP USD. And if we go to the charts, you would see that the pattern we have on Euro USD is similar to what we have on GBP USD charts. Let's go to Euro USD. Okay, so let's start with the monthly time frame, and that's because monthly candle just closed and a new one just opened. Okay, so we need to see how last month's candle closed. So you can see last month's candle closed what? As a doji, right? It closed as a doji, right? It closed as a doji. Now, if you go back, you would see this level we had. You can see this support, turn resistance, right? You can see this resistance, which became a support, became a resistance. Can you see that? If you also go back, you would see we had a support here, which became a resistance. Can you see that? Okay, so let's identify the areas of liquidity on the monthly time frame. It's either price we go for buy side liquidity, which is at this level, and also at this level. These are the buy side liquidity on the monthly time frame. The sell side liquidity, this the low of last month, sell side liquidity, and also this low. These are areas of liquidity. There are a lot of stop losses, okay, at that level. So if our bias is bullish, then we should aim for buy side liquidity, right? We should aim for buy side liquidity, which will be this high. First will be the high of this wick candle, okay? That will be the first target, the high of this wick candle. Then the next will be the high of the monthly candle, and then this one, okay? Those are areas of liquidity. So after the formation of doji on the monthly time frame, the next thing we need to do is go down to weekly time frame. And on the weekly time frame, we should identify a bullish reversal pattern on the weekly time frame. We should identify a bullish reversal pattern on the weekly time frame. It could be engulfing, it could be marubuzu, it could be inverted hammer, it could be doji also, it could be spinning bottom. Okay, if we see those patterns on the weekly time frame, that confirms that the trend for this new week will be bullish. Okay, so let's go to weekly. What do we have on the weekly? So you can see the pattern we have here is a bullish reversal pattern, right? It's a bullish reversal pattern. You see this demand zone. This is a demand zone. Okay, ICT student will call this order block. There was an order block here, right? Price pulled back, hit this order block or a support or demand zone, and what happened? There was a strong rejection. There was a strong rejection from that level, and the candlestick pattern that formed here is a bullish reversal pattern. This tells me that Euro USD is bullish. This tells me that there is more demand than supply. This tells me that we have more buyers than sellers. So I will be looking for buy opportunity on Euro USD. So let's go down to daily time frame. On daily, what do we have on daily? Okay, so on daily, I want to identify the high of this previous bearish candle that formed before price went bullish, before price turned bullish. This was the last candle that formed. Can you see that? And this candlestick closed above the high of this bearish candle. That confirms that we have more buyers than sellers. That tells me there's more demand than supply. Okay, so you can see what played out. Can you see what played out? Price pulled back and tested this high. You can see how price respected the high of this bearish candle and also this resistance that formed. Price respected it, and there was a strong pullback or strong rejection from that level. We could call this a marubuzu candle. Okay, marubuzu candle indicates change in trend, right? So this is a bullish reversal pattern. Okay, so After the formation of this Marubozu on the daily, let's go down to 4 hour. On 4 hour, if we are able to identify a bullish reversal pattern on 4 hour, that's another confirmation that Euro USD is bullish. So let's go down to 4 hour. I'm sure if we go down to 4 hour, we would find a bullish reversal pattern, maybe an engulfing pattern, a doji, a spiny bottom. I'm sure we're going to find that on 4 hour. Let's go to 4 hour. You can see on 4 hour, you can see the pattern, spiny bottom, hammer, hammer. Can you see that? Can you see that? Hammer, hammer. Can you see that? So for me, this is a bullish reversal pattern. Also on 4 hour, you would see that this resistance that formed here has been broken, right? That resistance has been broken, right? This candlestick closed above it. So tells me Euro USD is bullish. Okay, so let's identify areas of liquidity. This previous high, that could be the next target. And also this previous high could be the next target for Euro USD. Those are the areas I'm going to set my TP. Okay. And if I'm buying, now we should expect price to pull back and fill a fair value gap. I believe after this pattern that we have here on 4 hour, if we go down to 1 hour or 15 minutes time frame, I'm sure we'll be able to identify fair value gaps. Let's go to 1 hour. So on 1 hour, what do we have here? You can see we have a fair value gap. This is a fair value gap that was created on 1 hour. Okay, this is 1 hour fair value gap. Let's go to 15 minutes. Let's go to 15 minutes. We need to identify all the fair value gaps that was created on all the time frame. So as you know, the fair value gap on 1 hour will be different from the fair value gap on 15 minutes. And also the fair value gap on 15 minutes will be different from the fair value gap on, this is the fair value gap on 15 minutes, the gap between the high of this candle and the low of this bullish candle. This is the fair value gap. So I want to see price fill this fair value gap on 15 minutes before buying Euro USD. Okay, I want to see price fill this gap before buying Euro USD. I hope that is clear. I hope that is clear. So please, I would have to end this session. Okay, I would have to end this session. If you have any question, any pair you want us to analyze, I would attend to it on Tuesday. Okay, I will attend to your questions on Tuesday. I'm not feeling too fine. I just had to show up. Okay, so I would like to go end this session now. I appreciate you guys for showing up for tonight's session. Our next session will be on Tuesday by 10 a.m. If you're not on the WhatsApp group, please send me a message on WhatsApp. And if you are yet to subscribe to the channel, please click on the subscribe button so that anytime I come online, you'll be notified by YouTube. Ensure you subscribe. Okay, thank you, Mr. David. I would be fine. All I just need is just rest. I appreciate you all. I wish you all a wonderful night.